Fed chair says no need to cut rates. Weaker than expected jobs data out of the States. Payrolls rising 151,000. Costco plunged 7% on weaker earnings. Consumer confidence continues to erode. This is a major concern. In China, National People's Congress kicks into gear. We had year-on-year inflation data out of China. We were actually thinking that the Chinese economy was starting to move ahead. Very interesting to see how they actually sort of retaliate. Tariffs, the era of protectionism is with us. But let's take a deeper look, I think, into Australia's GDP numbers. And I think this is quite interesting because last week's GDP year-on-year and quarter-on-quarter growth rates suggested the year-on-year data of 1.3%. That's up 1.3%. And the quarter-on-quarter up 0.6%. Now, that's telling us that pretty much the economy is kicking along quite nicely. So let's have a little bit of a deeper dive into that. And as I said, when you see that growth actually happening, you get a sense, well, okay, what's the RBA going to do? What are the implications on that towards monetary policy? How's the equity markets going to fare? And also what the Aussie dollar is going to do. I guess the acceleration from the last quarter observed basically says the 13th consecutive quarter of economic expansion. Well, the economic expansion is low, we get that when compared to some of the other economies, but it's still expanding. And this is the most rapid rise since the final quarter of 2022. And I think it paints a very positive picture when you compare us over US and China. And in this week's report, we've had a little bit of a comparison there. And you can see exactly that our market's starting to pick up, albeit off a lower base, whereas the US is starting to turn lower and China is just gradually trying to pick up their GDPs. I think the key there is the US because, if what happens in the US tends to sort of spill over into what happens in Australia, regardless of what the international market is actually saying. Okay, a bit of a deeper dive. We can see there's a major uptick in household spending. And I think this was really increased expenditures on essential services, notably rent and healthcare. Now that's quite interesting. There is an uptick. I do know the healthcare sector sort of put up rates as well. So people are going to start to make some decisions. Cost of living crisis in Australia remains there because rentals are still up there and people are affording. Now I do think this is probably a bit of a temporary feel as well. So I guess when you really look at it, the overall economy looks quite robust. And when you see that expanding by 1.3 quarter on quarter, it's not too bad at all, and 1.3% for quarter four. Then it sort of gives us a sense, well, should equity markets then start to move higher? Now, I think this is where Australia places itself in a very interesting position because we take a lot of news from offshore and we sort of apply that back into Australia, and there's more. Australia generally doesn't sort of trade by itself. If something happens in the States, we'll generally feel the effects quite quickly, and we've seen that obviously with that correction that we've already seen. So I do think that a lot of the reliance, I think if anything, the momentum for the downward pressure in the local equity markets basically will be as a result. They'll be slower than perhaps we'll see overseas. And I think that, to me, is where we'll probably go with the Aussie equity markets. When you look at monetary policy from the RBA, probably expect the RBA to hold off now. This expansion in GDP generally says that people are spending and that will afford price pressures. And if that'll put pressures, then we go back up through that 2 to 3% inflation. So we really want to expect CPI now to pick up a little bit. As a result of this new regained strength in the local market. I think the key there will be is this just a blip or is this something that is going to become entrenched? If that's the case, monetary policy will stay where it is. I don't think we'll get too much movement on monetary policy, particularly towards the end of quarter two. Remember, the RBA hasn't moved a lot and it's not following internationally what's happening, but at the end of the day, I think they'll hold off. And I think we'll see that interest rates remain high, which, when you flip side, we've got that bullish call on the Aussie. It might be quite supportive of the Aussie. Okay, this week we've got US inflation rate. That's going to be a huge one. Producer inflation, JOLTS jobs earnings, and Michigan Consumer Sentiment Index. That'll give us a good insight as to what's happening in the American economy. In the UK, we've got January GDP, industrial production, goods, and Canada interest rate decision there as well. China's CPI and PPI prints. So it's going to be quite an important week this week, to see how the market's reacting to Trump's first period in office. and I don't think we're expecting that volatility to continue. So I think, if anything, a little bit more bearish.